Friends, it happens in business many times that you send your goods for approval purposes. When you send the goods to the customer side, and if customer approves it, then it will be treated as sale. And if customer refuses to take these goods and you are supposed to bring back these goods, then it is not a sale. So there are cases when you send goods on approval basis, then when invoice is to be raised. Suppose you send goods to the customer from Delhi to Chennai in the month of May. Goods reaches Chennai in June and your customer inspected it and said, yes, okay, these goods are as per my requirement, and it is accepted. So in normal circumstances, supply of goods is month of April. But because these goods have been sent on approval basis and goods have been accepted by the consumer in the month of May, in the month of June, then time of supply will be a question mark. So law says, where goods are being sent or taken on approval for sale are removed before the supply take place, the invoice shall be raised before or at the time of supply or 6 months from the date of removal, whichever is earlier. So we need to understand the importance of the time also when we are raising invoices. So in this case it says invoice should be issued before or at the time of supply or 6 months from the date of removal. So at maximum to maximum we can delay up to 6 months, but once it is approved, the date of supply will be the actual date of invoice and accordingly tax will be paid. So once goods are sold, invoice is raised, payment is received, matter is over. But sometimes it happened that your buyer pointed out some mistake in your invoice, maybe because of quantity, maybe rejection of material when they were actually they were using in their production. So during production process they came to know that material is defective. They send an intimation to you that your such and such material is not working as per the requirement during production, or then there may be some other reasons. So accordingly, either you will get your material back as a rejection and you have to replace it, or maybe at the time when you raised the invoice the tax rate was 18%, but later on it came to the notice of the consumer that it was not 18%, at that particular point of time it was 12%, later on it was increased to 18%. It happens many times. So if that is the case, what option is there? One option is you reissue credit note, or you can also revise your invoice if time permits. And law says a registered person may, within 1 month from the date of issue of certificate of rescission, this is talking about another case. See, in rescission we discussed about when you are supposed to take rescission. So I told you that when my turnover increases the threshold limit of 20 lakh rupees, within 30 days I am supposed to take rescission. So during these 30 days, should I stop my business? No, because during these 30 days I am not having GST number with me, but I am regular supplier and my buyers are approaching me for supply of goods. And when GST number was given to me, it was given with effect from very first day when I crosses the limit of 20 lakh rupees. So during these 30 days, whatever invoices I have raised to my customer, all invoices are without GST number. So in that situation also, I need to revise my all invoices and I have to issue to my customers invoices with GST number. So, it is talking about that case. Otherwise also, where if there is any quantity difference, if there is any rejection in material, and if it is within the same month when invoice was raised, you can always issue a revised invoice. Further friends, he may issue a consolidated revised invoice in respect of all taxable invoices made to a recipient who is not a registered under the Act. So, invoice can be raised under GST, there is no issue, and if invoice has already been raised, payment has already been received and time has also gone, then there is any change, then debit note or credit note is the answer. We will discuss that also. Debit note, credit notes, very important documents and having same value, same importance as our invoices are having. So friends, I raised invoice to a party for 100 rupees and tax was 18%. My invoice value is 118 and party has given me 118 rupees. Later on I came to know that on this particular item the invoice which I have raised, actually tax is 12%. So, I have charged 6% extra. So, I can always have an option to issue a credit note. So, where invoice is raised for excess amount and actual value was lesser than that, I can issue a credit note of the same amount. And where I have charged less, but actually it was supposed to be charged more, I can raise a debit note. So, accordingly tax liability will be settled. So, in case of an invoice of 100 rupees, if I charge 18% instead of 12%, I will issue a credit note of 6%, means 6 rupees, reducing my tax liability to 12%, and accordingly ITC will be reduced at consumer end. And if I have charged 12%, but actually it was 18%, so less 60% is charged, I can raise debit note of 6 rupees to my customer and ask him to pay 6 rupees more, and accordingly tax will be paid. So, credit note when invoice is raised on higher side, and debit note when invoice is raised on lesser side. To make the entry actual, we use these documents, credit notes and debit notes. Credit note can be issued by supplier only, and debit note is also can be issued by supplier only under GST. We also have debit note or credit notes in accounting separately, where buyer can also issue debit note or credit notes. But in GST, supplier is supposed to issue debit note or credit notes. So friends, whenever we are issuing invoices for the supply of goods and we file our returns and we declare all such invoices in our returns, which consist of my total turnover, the value of goods I sold, which determine my tax liability. Similarly, we also declare our debit notes and credit notes in our return, increasing or decreasing my tax liability. So, after issue of invoice, if I declare my credit notes or debit notes in my return, I am doing justice, I am fully compliant under GST, and if I am not doing so, I may be in trouble, because debit note and credit note also increase and decrease my tax liability. So, these are the legal documents like invoices. I have to keep these documents, debit notes or credit notes, in my record, also to be declared at GST portal through my returns, and accordingly, if I am benefited, I should take the benefit, and if I am supposed to pay tax, I will pay tax on that. How insurance company or banking company issues invoices, because these are special category of businesses. They have their own role in the economy. So for them GST has separate provisions, and it says where supplier of taxable services is an insurer or a banking company or a financial institutions, because these companies give services to their customer. Insurance company is giving insurance and premium is subject to GST. Then banking companies commission is maybe a demand about draft charges, whatever it is, they are subject to GST, including not banking financial institutions. The said supplier may issue consolidated invoice for a whole month to its customer or any other document in lieu of invoice, that is bank statement itself is sufficient for disclosing that this amount is debited by bank to your account at the end of the month, and tax can be paid accordingly. So bank will charge tax to its customer and pay to the government. They will file their returns accordingly. Then friends, truck fleet owners, transporters, how they will issue invoice, because ultimately they are also raising invoices and their services are under reverse charge mechanism. But in GST they have both the options. Either they can go for reverse charge mechanism by not charging tax, or they can be a regular tax dealer, taxpayer under forward charge by charging 12% GST. It is up to you, up to these people. If they are in corporate sector, means the transporter is a corporate entity, they may opt for forward charge. But if you are an individual or small business segment, then you may have reverse charge mechanism as a option. So if you are in business of transport agency, then you are supposed to issue invoices and get payments, and it says where supplier of taxable services goods is GTA, supplying services in relation to transportation of goods by road, goods carriage, the said supplier shall issue tax invoice if he is a GST registered person in forward charge mechanism or any other document in lieu of this, mentioning the gross weight they transported, name of the consignor and the consignee whose goods were transported and to whom it was delivered, registration number of the goods carriage, who is carrying the goods transported, identification number of person liable to pay taxes, consignee of the goods transport agency. So they are need to give proper invoice for their transport charges, whatever they have charged for transportation of goods. If there is a case of passenger transportation, we all know that we use local buses and whenever we are traveling in bus, we get a ticket. So this is a document of providing services by a transport agency to the customer, to the passenger, and accordingly tax will be determined and to be paid. We all watch films, movies, visit all PVRs and all. So for watching movie we need tickets. So these services are also subject to GST. So it says a registered person supplying services by way of admission to exhibition of movies in multiplex screens shall be required to issue an electronic ticket, and said electronic ticket shall be deemed to be a tax invoice. So their ticket itself is an invoice, and accordingly tax will be charged and tax will be paid. So friends, question comes, can we supply goods or services without issue of invoice? Earlier I told you that without issue of invoice you cannot move your goods. It is a crime. But yes, there are cases where goods can be moved without invoice. And what are the cases? It says, in case of supply of liquid gas, where quantity at the time of removal from the place of business of supplier is not known. In gas industry where supply is made through pipelines, meters are put at consumer end to determine the quantity consumed. So, in pipeline we are having thousands of kilometers of pipeline in India, and when it reaches the consumer end, meter will tell us how much quantity is delivered and accordingly invoice will be raised. So, this case when gas moves from supplier end, they cannot determine the quantity and they cannot raise the invoice. So, at the month end or whatever that agreement is there, maybe 15 days or 1 week also, supplier and consumer both will identify the quantity delivered and accordingly bill will be raised. Even in home consumption also, when this CNG is given to us through pipeline, based on the meter reading, bill is raised. It is not sent in advance. When transportation of goods is for job work, if we are sending our goods for job work purposes, for some process outside the factory, there is no need of issuing invoice. It will be dispatched on delivery challan and will be back to our premises with that delivery challan along with the job charges invoice sent by the job worker. So, movement of goods will be without invoices. Transportation of goods for service for reasons other than way of supply. If you are supplying goods on approval basis, it is not actually supply, it is just a approval, as we discussed earlier also. It can be sent on delivery challan. There will be no invoice at all. Or such other supplies as may be notified by commissioner. Considering the industry requirement, if commissioner is convinced, government is convinced that this type of goods or the transaction can be happened without invoice or invoice can be raised later on because this is not possible otherwise, they may notify such transactions and business can be done without issue of invoices. If there is no invoice, then what documents is required, what document should be there along with the goods, that is delivery challan. So, delivery challan is a document which contains all such information which are important from business point of view as well as from GST point of view, and it carries almost all such details which are there in invoice. So, it says the consignor may issue delivery challan serially numbered not exceeding 16 characters in one or multiple series in lieu of invoice at the time of removal of goods. So, here we are removing goods, movement is there for goods, but tax invoice is not there and we are using the word or the document delivery challan. So, delivery challan carries everything what is there in the invoice. The only difference is that on delivery challan GST is not payable, whereas on invoice or taxable invoice delivery challan tax is payable. On delivery challan goods are not supplied, but if tax invoice is there, it means goods are under supply. So, everything as I explained you that delivery challan carries almost everything which contains in invoices. So, there is another document equally important, that is E-way bill, and it happens that whenever you have any movement of goods, either invoice should be there or delivery challan should be there, and apart from these two documents, another document that is E-invoice is also must. E-invoice is a movement of goods via transportation, via trucks or the vehicle. So, E-way bill is a tracking system for vehicles carrying the goods. So, it says, is there any case where E-invoice is not required, E-way bill is not required? It says the person in charge of the conveyance यानी कि truck driver shall carry copy of the tax invoice, bill of supply issued in accordance with the provisions of section these in case where such person is not required to carry e-way bill. So, if e-way bill is not there, at least invoice or delivery challan must be there or bill of supply must be there. It's very simple and important that whenever there is a movement of goods, some document should be there with the vehicle. So, for e-invoicing, because now GST is having a provisions of e-invoicing, any business house having turnover more than 5 crores is mandatorily adopt e-invoice system. It is a GST, apart from GST, it is a GST portal system rather would say, where you will get normal invoice through your system only, and e-invoice has its own benefits under GST. So, it started with effect from 1st April 2022 and now it is mandatory for every business house who is having turnover more than 5 crores rupees. And it is applicable only in case of B2B transactions, where there is a transaction between registered person to unregistered person, you cannot generate e-invoice. So, you have to separately generate the normal invoice that you are getting from your system, your software. Now, coming to e-way bill, as I told you that whenever you are moving your goods from supplier to buyer, it must carry invoice or it must carry bill supply, or it must also carry e-way bill or delivery challan should be there, but e-way bill is mandatory if your value of goods is more than 50,000 rupees. It is a tracking system for vehicles carrying the goods, as I told you. So, e-way bill is again generated through GST portal. It has separate portal for that, e-way bill portal, and when you are just to move your goods, you are supposed to fill information on e-way bill portal about your goods, about your vehicle, type of vehicle, distance to be carried and distance to be covered, and for distance to be covered there is a time limit also under GST system. So, if there is any violation for e-way bill, you will be penalized. So, provisions of e-way bill says every registered person who initiate movement of goods, means supplier who starts moving goods for supply to buyer and value of goods exceeding 50,000 rupees shall furnish information relating to said goods as specified in part A of GST e-way bill number 1 electronically, means on portal, on a common portal, along with other information as required, supply to the recipient. Other than supply means for job work, means whenever there is a movement of goods, whether it is supply of goods, whether it is for job work, e-way bill is required. Maybe inward supply from unregistered person, means if a person has purchased goods from unregistered person and unregistered person is not in a position to raise invoices, but even then if goods value is more than 50,000 rupees, then buyer, the person who is purchasing goods from unregistered person, need to generate e-way bill also. So, this 50,000 rupees, the limit I told you, is vary from state to state. Some states has kept the limit up to 1 lakh rupees for e-way bill, but majority of the cases it is 50,000 rupees. And provisions of e-way bill says the value as per section 15, when we say 50,000 rupees value of goods need e-way bill, that 50,000 is inclusive of, but does not include exempted goods value. Rule 138 is very important for movement of goods and needs e-way bill, especially for interstate transactions. So, it is one of the document which carries all details of the goods being transported. Apart from invoice, you should have e-way bill, and if it is a delivery challan, again you must have a e-way bill. So e-way bill must raise issued either by supplier, recipient, transporter. Either of the three parties can raise this e-way bill. Invoice can be raised only by supplier. Delivery challan can be only raised by the supplier, but e-way bill can be generated by supplier or transporter or recipient, because it is linked with the vehicle carrying these goods. So buyer is interested for early delivery, department is interested for proper tracking and actual transaction between supplier and buyer. So e-way bill is important for all the stakeholders. In case of e-commerce or in case of courier services also, e-way bill is required. Courier agencies are supposed to carry e-way bill for all consignments being carried in the same truck or one truck. In case of job work also, e-invoice is must if invoice is more than 50,000 rupees. For handicraft goods also, though they are exempted goods, but e-way bill is required. In case you are dispatching goods by railway, e-way bill is required, and supplier or the recipient should raise the invoice, should raise the e-way bill. Railway authorities will not raise e-way bill. In e-way bill, you are supposed to give detail of your goods as well as the detail of your vehicle. So if you are carrying your goods through your own vehicle, personal vehicle, that also to be given in e-way bill. These are not exempted. If you are even transporting goods through public transport other than railway, even then you are supposed to give detail of that vehicle through which you are carrying the goods. In case of jewelry also, you need to have a e-way bill in place. In case of transportation of goods, vehicle got damaged and you need to shift the vehicle goods to some other vehicle, it is allowed, and you need to update e-way portal accordingly for new vehicle. And if goods are delivered at consumer end and these are further moving within the radius of 50 km, there is no need of any e-way bill. Consolidated e-way bill can also be generated by the courier parties. E-way bill can be cancelled. Suppose you loaded your vehicle with your goods and you generated e-way bill also, but somehow vehicle could not move, you can cancel your e-way bill within 24 hours. Once e-way bill is generated, it has a validity of 15 days. But if you have started moving goods, it has time limit again. So due to some unavoidable circumstances, you can extend the validity of e-way bill. If you are not complying with the provisions of the law, especially for e-way bill, 10,000 rupees penalty is there. There is harsh provisions for non-compliance with the provision related to e-way bill or movement of goods under GST. Penalty up to 200% of the taxes can be imposed, and 25,000 penalty can be imposed any person involved in such type of activities. So e-way bill document is very, very important, and it leads to conveyance through which these goods are being moved, transported, and we are supposed to take extra precautions when moving goods and generating e-way bills. And friends, if a registered person failed to file 2 consecutive monthly returns or quarterly month as the case may be, he will not be in a position to generate e-way bill. So regular filing of returns is must. Otherwise, what will happen? If you have not filed your returns and system will block your e-way bill generation, you will not be in a position to supply your goods. Your dispatches will stop. So friends, these were all things related to invoices, related to bill of supply and related to e-way bill. These are the basic documents under GST which establish supply of goods, which establish place of supply, which establish point of supply, which establish your tax liability, and accordingly you are supposed to pay taxes. So these are basic documents. Based upon your original copy of invoice, you will be able to have a benefit of input tax credit. If you don't have original copy of your invoice, you will not be in a position to avail ITC. So, with these words, thanks a lot for now. Thank you very much.